Raoul Pal's latest interview about the big moves behind the market. You'll be amazed at yourself in 5 years if you keep buying Bitcoin during this panic cycle. You'll see why the potential rewards could blow away your expectations. Bitcoin's price has never gone back to its cyclical lows. Raoul Pal possesses a comprehensive and in-depth knowledge of the global financial markets. Some of the best minds in economic history and the study of business cycles look to him for guidance. He has the skills of an economic historian because he can simplify intricate concepts and draw on relevant examples from the past to explain potential outcomes in the financial markets. He's dead on, usually, and he describes things such that the average person can grasp them. Raoul Pal's extreme zeal for cryptocurrencies is likewise not hidden. This cryptocurrency panic cycle, according to Pal, a former Goldman Sachs employee who briefly resigned in his 30s, is unprecedented. Despite the widespread pessimism surrounding cryptocurrencies, he insists that blockchain technology's underlying principles and its narrative remain unchanged. Since the earthquake hit, everyone has become extremely sensitive. This level of optimism in crypto and the stock market is unprecedented in my experience. I posted a slightly bullish graphic to suggest that the Nasdaq may have already factored in a big recession. There were at least 100 angry responses. I can't believe I said that. Powell thinks the narrative hasn't shifted. Therefore, investors should purchase on panic sell-offs and keep onto their crypto assets for compounded profits in the long run. He draws parallels to prior cycles and notes that despite declining prices, adoption rates have continued to rise. From the high point in 2017 to the low point in 2019, we lost almost 80% of the wallet addresses that were actively being used. Looking at it today, I see that we've lost around 30% due to the increasing adoption. When you learn about crypto cycles and refrain from using leverage, everything will start to make sense. The cryptocurrency market is cyclical, with price movements typically correlating with the halving of Bitcoin's supply every 4 years. Expectations are high and excitement is high in the days leading up to each half. Reward for Bitcoin miners is halved, and the creation of new Bitcoin is slowed by half. There are typically 4 phases to a cycle: run-up or bull market, accumulation, stage 3, distribution, rundown, bear market. According to Raoul Pal, there are 2 factors that control the market cycle: technology's worth, world cash flow. It causes boom and bust cycles because fewer people have money to invest in assets when liquidity dries up. Powell predicts that the armchair quarterbacks who declare cryptocurrencies to be a Ponzi scheme as a result of their knee-jerk reactions to price swings would be among the first to purchase Bitcoin and Ethereum in the next market upswing. Crypto is a revolving door. That manner forever. Its worth is calculated with this easy formula: technology value plus global liquidity. Large booms and collapses are caused by the global liquidity cycle. Every time there's a boom, those on the outside cry bubble, and every time there's a collapse, people say it's all a scam. A Ponzi scheme. This is the final phase of the cycle. It will never return. Raoul Pal disputes this, arguing that historical pricing data shows that market prices never fall to their former lows. He describes a number of historical occurrences in which the market rebounded and even surpassed its former high point afterward. Because of the Mt. Gox hack, prices dropped by 92% in 2011. 2013 saw an 85% drop in pricing. They called it a Ponzi scheme. The ICO meltdown in 2018 caused prices to drop by 83%. Currently, FTX lost $32 billion overnight, causing a market-wide decline in cryptocurrencies. According to Pal, people leave the area before the next bull run and then flood back in. Aside from a lack of liquidity, he sees data showing fewer people exiting the industry and puts the responsibility on those who are utilizing leverage. He insists that borrowing money to invest in cryptocurrency is a bad idea because all it takes is one misstep to knock you out. The frequent and large-scale corrections in cryptocurrency, he adds, make it impossible to effectively manage risk. Now, I want to talk about leverage. When collateral declines by 80% or cash flows decline by 50% over the cycle, managing open-ended leverage balance sheets becomes extremely difficult. Naked leverage should be avoided by ordinary investors because of the high risk of rapid capital loss due to frequent and big price movements. Boom and bust are caused by fluctuations in the world's money supply. People go bankrupt when their funds dry up. Furthermore, speculative spending has decreased. When the tide goes out, it's time to check who's been bearing all in the water. Adoption is the only metric that matters. Outsiders' constant accusations of a Ponzi scheme are old hat, argues Raoul. In a recent tweet, he cites a Bitcoin chart to back up his claim that Bitcoin is increasing at a rate of 125% each year. Scam. The term Ponzi has become overused. It's hogwash that obscures the reality that Bitcoin's network has grown by 125% in a year, which is astounding growth. You can see how each new Bitcoin low compares to the preceding high going all the way back to 2012 in the accompanying chart. Raoul's Twitter. Because Bitcoin is still in its discovery and acceptance phase, each low, according to Powell, leads to large price gains. He claims that the network is expanding, and that liquidity always returns. Liquidity will soon begin to shift. Crypto will succeed regardless of whether or not there is a super cycle of liquidity like 2020, or even a positive cycle as the network expands. Again, here we are. There's a point near the bottom where hopelessness reigns supreme, and everyone goes crazy, just like they did at the bottom of every previous cycle. But the network keeps expanding. According to Powell, the market is a survival game, and you should aim to go against the grain of market sentiment by adding to your position. If you do, you may wind up surprising yourself in ways you never imagined before the decade's conclusion. It's all about staying alive. Think in the long term. Boost your standing on the depths of despair. You can never know the true low price. Stay away from leverage. Use a cool wallet to keep your valuables safe. Keep fighting. Remove all the background noise. People who currently cry scam, Ponzi, will be among the next round of customers. Repeat. Concluding remarks. Powell's prognostic abilities have been less than stellar on occasion. He has been wrong before, and he will be wrong again. I completely agree with the gist of his argument. He advises against employing leverage because the market is still unpredictable and the cost of a complete wipeout would be too high. In addition, the market's cyclical nature ensures that you'll always have a favorable entry position. Don't rush anything, wait for low prices, and avoid using leverage.